So this is weekly commentary 47. Now, from the previous week, this weekly candle for the week that just passed, we anticipate a move lower for the weekly expansion on the DXY, which has been this candle. And you can see now we're really working our way towards this sell side liquidity pool. Now, before we go into the technicals, I want to further talk about the CPI numbers that came out and the earning reports that came out for the large banks of the US economy. Just before we do that, let me just put the annotations for where I see the draw on price to be. Consider this sell side liquidity pool to run this sell side, right? This displacement lower is, you know, I'm favoring the run on this sell side liquidity pool on here for the DXY for the next weekly expansion. I expect the weekly expansion to be lower. That doesn't mean the close of the candle to be bearish, but I'm expecting the move down into here. Even if we wick into here, that move from where price is right now and the candle to move here, it frames more than enough day trading opportunities for that move, right? On the 5 minute, 15 minute, you can that distance between the weekly chart from here to here is quite significant. On the topic of CPI, right? I believe it was around 6.5%, the inflation rate. Now, it's a big improvement from what it was before. However, it's still very off from the usual target of a 1 to 2% inflation rate. Now, with the numbers that came out, the Federal Reserve, they have a bit of a softer stance on how fast they want to hike the rates. So they still are going to hike the rates. I think they're favoring now a 25 BPS, right? Well, they say that it could be, a point 0.5, but right now they're pointing towards a 25 BPS hike rate. Now, in being softer on that, you could see the DXY becoming a bit soft. Now, if you look at the bond market, right, this is the US 10-year. We see this sell side liquidity pool here, and we saw that we failed to make a new high. Now, if you look at the actual bonds, right, if we look at the actual bonds, this is the actual bond, like the US 10 and the US 10-year is the yield for this, right? Now, if we go on the daily, we have really smooth highs here, right? Now, we have this down close candle here, right? You see how this candle fed into the order block and then we displaced away. This is your bullish order block. I want to see the run above these highs. Now, if you see on if we zoom out, you can see how many highs we've run. We've run highs from, like last year already, and we've dug into this big gap. I want to see the run above this high here before we see some sort of retracement. Now, in saying that, the bond yields, should run lower. In turn, the DXY should, favor this move into this area here. Now, the second thing I want to talk about fundamentally was the earning reports that came out for the US economy. Well, the big banks of the US economy for JP Morgan, Citibank, and BlackRock. Those were the main three on my list, right? Now, the earnings report essentially shows, how well they're performing financially, kind of like essentially a profit and loss. Now, why is this important? It's the sentiment of the market, right? From an investor's standpoint, they look at the top dogs of that industry, that bracket, right? So let's talk about the financial industry. If the top players, right, the biggest, firms in that industry, the ones, remember, they have the most resources. They have, the edge over competition just because of their size and how much resources and capital and, you know, labor and whatnot they have. If they cannot perform well, then a rule of thumb is that that industry in a whole won't perform well because they have more resources than the smaller dogs in that industry. How can they do well if the people with more resources than them can't do well themselves, right? Now, in saying that, this relates to a risk off environment. So you see how it's kind of in the middle now. The inflation rate is easing. They still want to hike the rates objectively. They will do it. It's just at a slower rate now. But on the flip side, the earning reports, I think BlackRock was like minus nearly 7%, which is quite significant, right? The industry of the US economy, they weren't performing well. Now, to an investor, they will have a lower risk appetite towards the US economy's financial industry. That turns into a risk off environment. Now, for the DXY, a risk off environment would see a higher DXY. However, for now, I'm still seeking sell side objectives because it says it fundamentally. It does not mean that the candles point upwards immediately. Now, if you're thinking what this line was, remember what I said, the CPI, the interest rate hike. The 1st of February, I told you guys on the Telegram chat, line this out. Now, before I explain what this line is, what is this, right? If we go to the monthly chart, you see from last year we had that big energetic move up. It was essentially just month after month after month, we were just, you know, rallying up in this market on the dollar. Now, if we take a fib, right, let's take the low here. If we take a fib, right, you can see how we're offering a retracement. Now we're getting to equilibrium. You see, we have this down close candle here, and we see this fair value gap. This is the first array in the discount to consider, right? Let's move into here, and then we can see how, you know, price is trading at here. Also something to consider if I just remove this, right? This high here is a mitigation block, right? High, low, high, higher low, higher high. This high here is also a bullish mitigation block, and it's kind of, you know, paired with this fair value gap. Let's see the move into here before we can, you know, start to entice a long overall bias again or continuation for higher prices on the DXY. If we go on to the COT data, if we go to currencies, let me go to the euro. You can see how it's still, you know, it's still pretty flat. There hasn't been an increase in their short positions yet. I believe, you know, in a few days again the chart is going to update, so I'll keep an eye on it. On the Tuesday, I'll recheck this chart to see if there's been an addition in longer short positions. But you see how they're still, you know, negative on their net position, their net short still. On the dollar, if we go to the futures, now you see on the dollar it's still relatively flat, right? But you see how they're making their way back to a, you know, a net long position. Now look at where we are in time, right? This was updated on the 9th. It will update again in 7 days, right? So the 16th, which is today is the 15th, so it will update again. If we're getting close to February the 1st, which is this line, right? This line is showing the 1st of February, right? Now, if we are getting more net long on the COT data, given we are approaching February, this is why I have February lined out. Wednesday, February the 1st, is the FOMC, the, you know, federal funds rate. This is when they're, you know, they're gonna announce the change in the interest rate, right? How much they're gonna increase it by. Now, this is time and price. Now, this is how we're considering on the higher time frame. You see, this is a, you know, it's a bias changing news event, right? It creates a lot of sentiment to the market, the actual interest rate. Have this marked out. Now, you see how we're nearing to it, right? You want to see how price, before we get here, is acting. For example, let's say we dip down into it quick, which I'm anticipating before February, we dip into this and, you know, we start to accumulate and we expand higher, right? This here is a news driver. At this time of, you know, the market, this day, right, there is going to be some sort of move in the market. This is how I frame my intraday trading and, you know, my weekly profiling. I have the news events, right, plotted with lines. And I see if this was an intraday chart on a 5 minute chart, how were we trading to, you know, up and towards this news event because I know at this time there's going to be some level of manipulation, right? Now, I'm favoring the run on this sell side liquidity pool into this monthly fair value gap being this area, right? Up until then, I'd be bearish on the DXY. I'd favor taking shorts over taking longs on dollar, and that translates to taking longs on euro and longs on GBP USD. Something to consider as well for Forex Factory. If we go through the week, on Monday we have a bank holiday for the US, so you're gonna probably see like a range bound DXY kind of consolidating or whatnot. Now on the Wednesday, we have a lot of red folders for the US economy, and we also have CPI for the pound. Now, in saying that, pound is going to be the mover, right? There is a lack of news for the euro, and the euro expanded, right? You see how the euro expanded? You see this high euro run it? You see how the pound was kind of stuck, right? I was favoring from here like a move down on, the euro GBP from this candle run. This candle's high, displays lower, just decided to run up higher. Now we've run, these highs. If we start to see the candles print down lower, Monday opens and prints lower towards this low, it's probably going to target that level of sell side liquidity, right? There's also a tiny fair value gap from this candle's high and this candle's low. It's still a drawn liquidity nonetheless. Now that with a weak pound, a weak dollar, sorry, is going to be a bullish GBP USD, and you can frame this right. Watch this order block before you get to the high, right? This level here, mark it out, right? You can hunt longs, and this is going to be your drawn liquidity. Now, this provides a framework for you intraday. Every single day from midnight opens price, you want to see that move under midnight price, and then you want to work your way towards this drawn liquidity. Once this drawn liquidity is hit, you'll sit on your hands and see the willingness for it to take out this high, right? This is your initial target, and then you want to work your way towards this buy side liquidity pool at this high right here. Going back to the dollar, right? From the last weekly commentary, we framed the 50% of this candle being the consequent encroachment from the fair value gap from this candle's low and this candle's high, and we're still going to dig into it. There's quite a few confluences for that area to be met on the DXY. Now, I get a lot of questions regarding when to entertain, a funded account and whatnot. This is what I'm going to tell you guys directly. There is no point asking me when should you take your funded account. It's your decision, right? But I can give you guidelines on some criteria that should be met before you entertain your funded account. For example, financially, can you afford it? Have you had a level of consistency, and are you confident enough to place trades on the account, right? Can you sieve out a bias, or is the higher time frame, favoring expansion because you don't want to get caught in something like this. Remember in December we said just hold away from December because trying to trade in this range, look how small the daily candles are. You know, that's like 30, 40 pips on Euro USD. You wouldn't want to trade something like that, right? From the last week, you see like something like that when you can expect the expansionary move. Those are the type of weeks you want to start your funded account with. You see how it's kind of all in your favor. From a week where you can expect, a large, expansionary move, for example, sweeping the previous week's low and then coming back up in a bullish environment, you can expect the next candle to be an expansion to the upside, right? That's a time where you should consider it, right? Given that you're financially eligible and you're confident in your trading ability, the last thing you wait for is a clear higher time from expansion, preferably on the week or even the month, because you have a month for that trade challenge, right? 30 days for phase one. Now, the monthly candle, if you see that there's a clear low of the month or high of the month placed in from the monthly candle, that's going to translate to a few weeks of bias, and which then translates into days of bias, and you have you know a pretty nice intraday framework to work in. These are the type of things to consider. Now, one thing to mark out if we start to retrace higher up, because we have news on Wednesday. Now, every single time I want you guys to refer back to your Forex Factory calendar. Every single day, refer back to it. On the Monday we saw together, there's a bank holiday. The bank holiday is probably going to be lackluster. Now, Wednesday has the news driver. So Wednesday is, going to be the swing of the week, essentially, right? You want to see how the candle opens and starts trading. Now you have this little inefficient area here. You see these two candles and this volume imbalance right here, right? This is really inefficient. If you start seeing the candles print higher, frame the move back to this rebalance here. Now here, there's also this fair value gap. There's also this fair value gap here. From this candle's high to this candle's low, there's a fair value gap here, right? If we start printing upwards and we get close to this candle's high, and we engulf it essentially. Frame the move here for a retracement. Now, if that happens on the Monday and the Tuesday, sit on your hands and see where that Wednesday PPI takes you, right? If you get a rejection here and Tuesday quickly trades up into this area and Wednesday trades down, frame the Thursday and the Friday lower. Every single candle is a power of three. Every single candle does four things. It opens, it makes the high or the low, and then it'll go and make, so if it made the high, then the last thing it will do is, the second thing they will do is make the low, and then it will close every single candle. Now, every single candle, in saying that, there's a level of manipulation and then distribution. From the open, right? Let's say this bearish candle, from the open to the high here is the manipulation phase of the power of three: accumulation, manipulation, distribution. You'll accumulate, manipulate, and then this is the distribution. Now, in saying that, you're using the Forex Factory calendar to aid your power of three analysis, right? USD bank holiday, probably an accumulation. Monday, I always let pass because I want Monday to be some level of accumulation, right? Monday expanding is, it a lot of the times Monday does expand, but I love it when Monday consolidates because it sets up a very easy power of three on a weekly basis. Monday consolidates, right? Then you want to see Tuesday and Wednesday could manipulate. Now, the thing with the power of three, and it's taught in one of the weekly commentaries, a big misconception with it is that people think that the manipulative phase is just one spike move. They think it's just, if I get the path tool out, they think it's something like this. So we'll accumulate, right? And they think that the manipulation is just like this. It's not like that, right? It can be, but it's not like that. And I don't want you guys to view it like that. Rather, you'll have something like this. You'll have an accumulation, and then this can be manipulation into a higher time frame PD array. And then what you'll have is that move away. Essentially, a market maker sell model, right? Now, it doesn't always look like this. Sometimes it's a bit more difficult to gauge. For example, look, accumulation, right? One leg higher, retrace back down, leg higher, and then distribution, right? That's how the power 3 usually plays out. Now, you're using the time on the Forex Factory calendar, and you're using your PD arrays. Now, you're looking at when time is, is meeting time. When a specific day of the week meets a PD array from the backtesting I got you to do on chapter 3, that's when you know that the opposing end of the range could be met, because when a specific day meets a specific PD array or runs a specific level of liquidity, then you can assume that that's the high or the low of the week, and then you can trade away from it. Likewise, it's the same for the day, right? You see how it's a fractal, you know, idea. Given on the day, right, you accumulate Asian range and then you manipulate towards a PD array, then you can have a reversal away from the PD array. It's all about when time is meeting price, right? When the time of day or the time the day of the week meets a specific PD array or a run on liquidity, then you can assume X to happen, for example, right? And that's how you guys need to start thinking. Now, perhaps that might go over a few of your heads. I recommend watch it. Of course, reach out to me, ask a question. I can speak to you and try to make you understand it a bit better, right? So just to wrap up the weekly commentary, I'm also going to make another video following this with the breakdowns of the trades that I posted into the mentorship. I think it will be beneficial, so we'll do that. Watch the monthly close going into January. We've got around 2 more weeks to go, right? It is very unlikely that we go and we break this high. This is probably the high of the month, right? Very probable that is the high of the month. Now we're expecting the expansion of the candle. We have 2 more weeks left, right? We're very close to the low right now. I wouldn't say that this is the low of the month. I'd say that we got to move lower. This fair value gap is a very nice area for us to move. Now consider the time of the year. Like how we said that every single, day in the week you want to open and manipulate the opposing way, the same thing happens for the year. It's for all candles. Say this was a yearly candle, right? If we go if we go here, right? If we see this, right, and I bring that out in time, treat this like your midnight open. On an intraday level, treat that like a midnight open. Now, from midnight open, this is the yearly open. This is considering a yearly power of three. Think of this as a start of the yearly candle, open of the candle. You have a PD array that you can protract into, right? You have that PD array on the monthly time frame you can protract into. Now, if we protract here and we hit this array, and February, March, right, we're expanding and we get above this price, this is probably the low of the year, and you can expect expansion for the rest of the candle. This is how your brain needs to shift. This is something that I do in my mind. I don't know how to explain it, but one thing I do is this all the time, and I really recommend if you have a multi-monitor setup, set up your monitor like this. Make one monitor the just the daily DXY chart and just keep looking at that daily candle and see has the high or the low of that candle been placed in, and am I now expanding to make the main end of the range. For example, if you're bullish on the DXY and you saw that that candle was bearish and now it's wicking away from the low, you're probably in for an expansion, especially if that wick was in a logical area such as a PD array, a discount array, or running the previous day's low, right? When you just imagine it like this, and this is what I'm going to explain to you guys in the next video. When you see, right, when you can picture it in your mind, the manipulation of how a candle forms, right, open manipulates, and when you see it is starting to expand away from it, this is your chance. As it's expanding, you're trying to frame an entry that's in line with the expansion, right? Now, I used to be a swing trader, and this is how I'd swing trade, right? I'd look at the weekly, I look at, weekly opens, right? Sunday opening price, which is I'm going to teach you in the next video. And I used to look at things like this, and I used to look at, you know, I want to get close to like the high or the low of the month, right? So if I see that the monthly candle opened and I went down 1 week and now the next week I'm coming up off it, I'm trying to get close to this opening price because from the opening, I'm anticipating the expansion to the opposing side. So as long as it doesn't close beneath it, I'd be in profit with a safe stop loss, right? This, if you can apply what I've just done to your 4 hour candles, your daily candles, right? That opening idea, and you're waiting for that move beneath it. Now, when I say you want to buy at the opening price if you're bullish, it doesn't mean wait for the candle to open and buy, right? You can have something like this, right? Let me just do a little demo for you guys. Say this is your midnight opening price, right? This is your midnight opening price. Let me just make it a bit smaller. Now, before that, you have the Asians range, right? Now, let's say it's just a bit like this, make it a bit more accurate. Now, what you do is this, right? You move a bit lower, right? Now, as you're coming up, right? This, right, on a bullish day, this is where you want to start trying to frame your longs when you know that this is the possible low of the day because you're already anticipating a bullish day. This is where you're trying to get long beneath this opening price. Now, you can get above this opening price. You don't want to try long here, right? Unless it's a very clear, retracement to fair value gap to go lower and you can find a safe stop loss, that's fine. But you're not going to find a lot of pips. You're not going to find a big move. You may find 15 pips, 20 pips, right? When you get here, you see you can retrace back lower here, right? You're when you retrace here, you're getting too close or under midnight opening price. Why? Because you're favoring that the expansion of the candle, the candle's close should be basically higher than the open, right? So in saying that, getting close on that retracement, you see we went underneath the candle and now we expanded above it. It doesn't mean, let's say this is, the start of the New York kill zone, we can frame that retracement close or beneath the midnight opening price to then find, let's say there was let's say this is a mitigation block right here, and then we can find that leg higher expansion. That's how you frame your intraday, right? So on that topic, let's call that a weekly commentary. Really dial in on that last bit of the weekly commentary. It's a lesson in itself, right? So remember, we're framing, that move down lower for the week. Um, you want to watch this area to rebalance. Essentially, it's quite inefficient. Focus that fair value gap as well if we get close to it early on in the week, and then monitor this run into here. I'm really favoring this run into this fair value gap. So until next time, and I'll see you guys into the next video actually, which I want to make right now.